Hi guys, Harry Yotis here, professional trader for 20 years. Started way back in 2005 and still alive in 2026. Alive and kicking because, wow, market closing at new highs. Huge, huge. Look at these past 3 days. Chart of the S&P 500. Today is Wednesday, the 15th of April, the Ides of April. And we finished up another 1%, 0.8%, okay? We're literally up like 3% in 3 days. After this bullish engulfing candle here, boom, massive, massive buying. This is like, things were stretched here, okay? And now they're even more stretched. They can get even more stretched, okay? When you close to new highs, it's very, very bullish, okay? So we'll get to the new highs and what I think going forward. And guys, tune in to the end because that's where I give my positioning and what I think is going to happen going forward and what I am doing. Okay, so first we always talk about the technical picture. Now, we always look at three legs of the stool: technical, fundamental, and sentiment, or I like to call it sentimental. So fundamental, we'll get to that. But first, the technicals are very, very important. Finally, we can say bullish because we closed above the highs. We're past this chop zone. This whole move here is like a knife through butter through the chop zone as we suspected, because this selling was very, very vicious, and it pulled forward the selling that usually happens in the summertime to now, and everybody is scrambling to get back into this market, okay? Tripping over themselves. Here they're willing to sell. Now they have to really, really get back in, okay? So you have momentum carrying it, okay? We thought things were stretched here. They're even more stretched. Technical picture, bullish. We could bring in the moving averages, trading above the 50 in red here, trading above every moving average. Look at the short-term moving average trying to catch up here, the 10. This is the 20. And of course, the 200 still upward sloping, okay? So everything bullish. I mean, we don't even have to like overthink it. This is a very, very bullish technical close, okay? Sentiment. What happened today? Hey, we're falling to the greed. We were fear, neutral, greed, those three candles here. This candle, we were still in fear. Here we were neutral, and here we're in greed. It's happening very, very fast. First day that we close on greed. Wow, let's see if we get at least 1 week, 2 or 3 weeks into the greed category. Let's see if that continues. And we have, look, market momentum, extreme greed because we finished at highs. Breadth is coming in. Put call options, neutral. Like I'm sure this is like a 5-day moving average of the put call ratio. But I'm sure that today or yesterday, people bought a lot of puts. So this is going to probably go down going forward, okay? It's going to probably go into the greed and extreme greed going forward. I'm sure a lot of people bought puts, okay? And that is why you'll see that I am cautious going forward, okay? So the technical picture, bullish. Sentimental picture or sentiment is still bullish because, we have a long way to go. Not a long way. We've made up a lot of it, okay? So let's get to the main event. New highs, what I suspect will happen. What does this mean? Where do we go from here? Question mark, question mark, question mark. Okay, well, first, let's talk about what CNBC has to say. The S&P 500 and the NASDAQ composite close at fresh records as traders look past the Iran war fears. We've been saying this for weeks, actually for days. Ever since SPY here, this candle right here was the key. Let me make it a little bit more clear for you guys. This candle right here, okay? That green day, which was Thursday, 9th of April, last Thursday, okay? This was the key because as that was happening, we had oil go down. U.S. oil, look, this was the big 9th of April. Sorry, oil was up. Tough to see here, but oil was up and the market was up at the same time, okay, because it closed around here. It was literally up a lot and then it came back down. But oil was up with the market. That was the first indicator, and we mentioned it on that day, on that video, that this is a very special thing that should be taken note, because when oil goes down, you should expect to see the market go down. Now it's not. That was the first day that it went up. So you have to know that something very special is going on and you don't step ahead of it. Again, like we said here, the news is always negative on the bottom. You can't wait for good news before going long. You have to look at what the market's telling you, okay? So let's get rid of this. That day, the market was telling us something has changed. People are looking past the Iran war because oil was up and the market was up. So now CNBC comes out and says traders are looking past the war fears. Now they're mentioning it. You know, 4 or 5 days too late. But it doesn't matter, okay? New highs because of this, okay? So let's look at the oil again. Yesterday, I did a trade that got confirmed by my broker. I didn't have time to tell you guys yesterday, but I was told this morning that I got short. I put in some shorts on USO, okay? It's basically the United States Oil Fund, but I like looking at this chart, US oil. It still trades every second. Even right now, it's trading. It's at $91.23 a barrel. And I put in a short trade. I shorted a call spread in the money call spread, okay? Dated October. So by October, I think oil drops much, much lower than this, okay? I think in the USO, it gets even below the 100, okay? So I did a call spread. October, I did the 110, the 100, 110 call spread, okay? I basically, let's write it down here so you guys know. Okay, I sold a call here, and I bought a call at the 110 call. Sorry. Let's go back here. Kill it. Back. Okay. This is an in the money call spread, so it's a loser, right? But I did it for October all the way down here. I'll just put it here so you guys can see. And I did it for $6. Okay, the most I could lose is 10, but I took a $6 credit to do that because I think that this market oil market really goes below this level. Okay, this is just one. I also did another call. I have other call spreads put in that didn't actually hit, but I'm looking to do them as well. Okay, I'm looking to add short exposure via selling premium. Okay, because I think the oil trade is over. Okay, so let's get back to U.S. oil to tell you guys why. So I think, like, despite we're getting news that the Iran war is over, we're getting here on Zero Hedgers, the Iran war is very close to being over, eager for a peace deal. Trump says that they're going to progress toward a framework to end the war. Even Trump says this war is over. So both sides want the war over. Maybe Israel doesn't want to, but I think that this is going to be over and you're going to see oil get smashed going forward. So that's why I like to see this going down, and that's why SPY, I think, keeps going up. Okay. However, a little mental note is that I think that a lot of calls were being bought here. I know I said it here, but there's going to be a correction. Okay. The higher we go, the better it looks. So what I want you guys to look for, what I'm looking for is whenever the correction does happen, and it will happen, if it's here and it goes down to like 685, buy it. Okay. You have to buy the dip in this case. Okay, because everybody's positioned short. This is the mother of all bear traps here at 652. This is the squeeze from hell for the bears. So we are at new highs. That's good, but we could go higher. But I expect sometime soon we're going to get some kind of pullback, and when that happens, I'm looking to buy. Okay, and longer term, okay, I think we go like we break here, we break the 700. We might go up. Don't be shocked or surprised the market goes up another 10%. So we could go to like 5-10%, let's say. PDF. Okay. We could go up another 5-10% when the market breaches into highs. We can go up 5 to 10%, which is like another 750 is very reasonable. Okay, a 750 on the SPY is a very reasonable target. 770 would be 10%. So let's say 735. Okay, 735 here to 750. Okay, around this area, 735 to 750 is a very reasonable move. Now, it's not going to happen in a straight line. We're going to get pullbacks, but I think that's a very reasonable move once you break highs. Okay, especially when we went to so much max fear here. We have a springboard to go higher. Okay, so that's what I'm looking forward to. I sold all of the longs that I bought here, extra over and above what I normally have as longs. Most were sold here, and I sold the last piece there. So I'm holding no more of these extra longs. I'm just holding my regular longs that I've been holding since this whole bull market. So I'm expecting to ride that higher. Looking to do little trades here and there to take advantage of the ebbs and flows of the market. But so far, generally speaking, I'm out of these extra long positions, and I still have my regular positions, okay? And the last thing I like to look at with you guys is like, let's see the strength of this market, okay? I'd like to show you how strong this market is. First, we look at the banks. We need to have a strong banking sector if the market is to go up, and the banks were really getting smoked recently. Yeah, they're catching a bit. They're not at all-time highs, but they're catching a bit. We saw before the semiconductors at all-time highs. That always leads. We always look at consumer discretionary because, that'll start ripping when people start, feeling happy about, spending more money. And it has been ripping. Not at new highs, but it's been ripping. Industrials too should do good after the XLI. These are the industrials. They should do good with the manufacturing sector coming back 3 months into expansion. U.S. manufacturing, it's a big deal. Okay, so these guys are not at highs. The leading sectors are. So I expect a catch-up move there. However, okay, I'm expecting some kind of bullpack sometime. A lot of people bought some calls here. I'm very, very sure of it. Okay, you will see that soon in the fear and greed index, in this put-call ratio. You'll see the put-call ratio. Whatever you want to use, any free software, the put-call ratio, I bet you right now is at lows. Okay, so those guys have to get smoked somehow. Okay, so that's what I expect going forward. I am doing nothing. I'm waiting for a pullback before adding a little bit more exposure. The little short exposure that I got here is probably going to expire worthless. Okay, we had the best case scenario. We had a gap and runaway go. So my longs are printing, but my shorts are getting smoked. But it's okay. It's a very, very small, very, very small. I'm very, very happy this happened. Okay, so new highs, expecting a pullback soon. Things are getting very, very stretched, and people are getting very, very call buyery. Okay, they're buying a lot of calls, and I don't like that. Okay, so that's what I'm looking at going forward, guys. Looking forward to this market. What do you call it? Expanding on its new highs in the longer term. Okay, we can go up. Remember, 5 to 10% from here. So 750 for the S&P for the SPY is a very reasonable upside target. All right, guys. Later.